Okay, welcome to video number 2. Let's add a little more sophistication to our analysis of momentum now. So here at the bottom of the chart, we still have DAD. DAD is D for direction, and it's our longer term momentum indicator, and that's the black line, thick black line there. Now what we've done is we've added a histogram, and that's this blue funny looking indicator here with the vertical lines on it, and that's that pattern's called a histogram. And this is mom, and mom and dad work together. They're married, and dad, you know, he's a good guy, but he's a little slower than mom wishes he was, and she wants him to do all kinds of stuff around the house, and you know, he gets to it eventually, but much to mom's dismay, he's a little slow going. Mom, on the other hand, she's rushing around, she's getting stuff done, and you know, sometimes she's a little frantic, sometimes a little ahead of the game, but you know, basically she gets done what needs to get done, and people rely on her. So that's kind of the scenario here. It's very similar to the stochastic indicator that we use, where we have the two lines, %D and %K. %D is the more reliable one. It's really the one we use to measure cycles. But again, it's slow, it's lagging, and so we use %K to provide certain patterns that don't occur all the time. They don't occur at every cycle high and cycle low, but when they do occur, they give us an edge. They tell us, they give us a high probability scenario as to when D will most likely be turning in the very near future, so that we have a good high probability scenario of it turning before it does turn. And that's of course what we want. So we just wait patiently for trades until we get those setups and let the rest go. And so it's very similar with mom and dad here. It's not that mom and dad are going to tell us every turn of momentum accurately, but we wait for certain patterns, and when they occur, okay, then it's worth putting our money at risk. We've got a probability scenario that's on our side, and we manage our money well. When it works out, it's a beautiful thing. When it doesn't work out, well, that's okay. We keep our losses small, and then we wait for the next one. So what are these scenarios? Well, let's take a look at it. So here we've got our moving averages on the chart now. I've put those on just so you can you know, you should be pretty used to these now and understand the structure created by them. So again, just for review, the 200 is the orange. The gold one here, that's the 100 simple, 200 simple, 100 simple. The red one is the 50 simple, and the black one is the 15 exponential moving average. All right, we're not going to review those, but just so that you know what the colors are here. Then, and we'll bring our cycle indicator back up later, but right now I don't want too much on the chart. I want to focus on the momentum indicator. Okay, so let's just take a look at this here. The market's moving down short term, and we could see that on our 15 exponential moving average. The intermediate term trend is flat. Momentum's coming out of the market. Then we get a little momentum shift. Starts going back up. Up here, we get another momentum shift. That's a head and shoulders pattern. Left shoulder, head, right shoulder. Confirmed by momentum. See, our first, now here's the deal. Okay, we've got a higher high in price. Dad at this point is still angling up, starting to flatten out here at this high. But mom is giving the early indication. See the lower highs. And that's where mom comes in, where she's so handy, because she's faster than dad. So she's saying, oh, you know what? When you see dad starting to flatten out and mom diverging, then that's an indication that, I mean, what it's definitely telling you is, yes, we have a higher high, which is the definition, higher high, higher low, of a trend. But that trend is not strong anymore. It's a weak high. And this is what tells you that's a weak high. Without this, all you know is you say, oh, got a higher high, higher low, trend is still continuing. But what's the strength of the trend, the underlying strength? You need to see that energy. That is absolutely critical. And without a momentum indicator, you're not going to know that. And you will get deceived and faked out and take losses that are not necessary. Okay, we put in a lower low, a lower high. Now price comes in line. Lower low, lower high. But momentum, Mom specifically gave you that early warning. Now Dad's turned over here, so by the time you get over here, we've got everything confirmed. And we make the lower low. Then we flatline. See, this zeroing out here, that means there's no momentum. It's very important that you do not confuse momentum with trend. I see students doing this. I've been teaching for several years now, even before I had my courses on the internet. So I have a lot of experience with students, and I know some of the challenges that they run into. So this is where people get a little confused. They think that this means there's no trend. There can be a trend, but there's no momentum. There's no strength behind it. That's the best way that I can really describe it, is because again people get a little confused over the whole concept even, is just think that trend is direction, higher highs, higher lows, lower highs. But momentum just means how strong is that trend? What's the strength behind that direction? And right now there's no momentum. See, that's what the zero line means here. And so momentum, that's why you want to put your zero line in there. You want to have that highlighted a little bit, because basically this MACD is an oscillator. Now, unlike the stochastic indicator, MACD is not bounded. All right, stochastic is bounded. The lowest it can go is 0. The highest it can go is 100. It is mathematically bound to that range. So when the stochastic gets high and the market gets overbought and it keeps going up and up and up and up, you'll get your stochastic just hanging at the top of the range, wiggling around up there. MACD doesn't have that mathematical limitation. It is not bounded. It can go higher than, well, it's not going to be 100 because it doesn't use those same numbers, but it has no limit as to how high it can go mathematically, or no limit as to how low it can go. However, it's still considered an oscillator because it's going to oscillate around the zero line here. So that's another advantage of MACD as it relates to the stochastic, because with stochastic being bounded, it's nice to see have another indicator on your chart that isn't bounded. So as things keep going higher and higher and higher, it's not going to get stuck at the top of the range or the bottom of the range. So, however, just remember that gravity essentially will pull it back to the zero line, and zero line means no momentum. So where this gets tricky is sometimes it'll go down like this, well, like this here, and you'll think, or let's say up, and you're thinking, okay, momentum is up. Well, not necessarily. It could just be zeroing out. And it's important to always realize that as it approaches the zero line, it doesn't mean it's going up or down. It could be, there's two choices. It either could be going up or down, increasing, or it could just be zeroing out. Okay? So, that is what we have here. Well, let's just scroll forward and see what patterns form on specifically Mom as it relates to Dad. Okay. We're going to look at different patterns. We want to get a trend going here. That's what we want to look at right now. Okay, now we've got a trend started for sure. So here is our 50 MA. Rolls over. Okay, and what's going on with Mom and Dad here? They're just confirming. Okay, so Dad going down means moment from the zero line. See, Dad had flattened out. This whole time here is really no momentum. Dad zeroed out. Then this is a contraction cycle. It starts moving down. Mom moves first. See, Mom makes this bigger move here before Dad really goes anywhere. Dad's still around the 0 line. Price made a lower low. So everything's going in the same direction. 50 MA is angling down. Mom's starting to punch down here. Price makes a lower low. Notice where we stopped here, the 200 moving average provides our first resistance point. That's normal. But everything's lined up to the downside, so wait for a retrace. Now, on the retrace, we want to make sure everything's still lined up. This would be a retrace in the trend. 50 MA is down. Retrace to the 15. We've got resistance. We've got a 2-bar reversal pattern for candlestick people. But where does momentum retrace to? It stays here. It does not retrace very much. And that's good. That's good. That's just confirming that momentum is still good. Momentum is still to the downside. Okay, so in trend trades, basically you're mostly just using, especially on these single retraces, you're just looking at momentum to confirm the pattern, just to line up with everything else. Okay, continues down. Okay, now what do we got? Oh boy, here we've got something different, don't we? So let's count. We've got first retrace in a trend, second retrace in a trend, third retrace in a trend, double bottom, possible double bottom. At this point we're not quite sure. This could come back down. We've got a black candlestick here. It could come down and break that low. But so far it looks like an equal bottom. It definitely is an equal bottom. Okay, just meaning these bottoms are close to being the same price. But is it a double bottom? A double bottom is a reversal pattern. And so you don't have a double bottom until it breaks this high. If it breaks this high, it's officially a double bottom. Otherwise, it's just an equal bottom. Okay, you might say, hey Barry, that's just semantics. Well, it's important to have terms for each technical pattern so that we can communicate effectively and we know what we're talking about. So, yes, it's semantics, but it's important to define your chart patterns and be consistent in your definitions. But here's the key. Lower low in price, higher low in momentum. Now I'm looking, this is again another place where students quite often get confused. They can see these bottoms, but they have a hard time seeing these highs. Okay, for me that is clear as day, you know. But for some people, I don't know. I think the histogram throws them off. But that's a high and that's a high. Now, certainly, if visually that's hard for you to see, for your brain to wrap itself around, no problem. Just, you know, change the visual element of your chart. If for you, you would rather have just mom as a line and not as a histogram, that's fine. It doesn't matter. You know, how you visually represent these things is not important other than it being important to you. Whether your chart is visually represented the same as mine is meaningless. What is important is that your eye can see it, can see these patterns. So feel free to, you know, use different visual representations. Again, basically I think the only two choices here are either use a line or a histogram. But for me, I like the histogram. If you like lines, that's great too. So anyway, higher high, and that's our first clue now. Okay, because what that means is this retrace, even though it's making a lower high, and therefore we would say the trend is probably continuing, Mom says, yeah, except there's a lot of strength to the upside that's invisible in the price chart alone. So be careful now, because if you know the primary energy is to the downside, but there's starting to get to be some buying energy coming in against this, and that buying energy is getting stronger. Therefore, as we come back down, we're going to watch, okay, is there enough selling energy to overcome this increased buying energy? The answer is no. Because as we put in this low and we bounce off of it, where does mom go then? Now mom's got a higher low as well. Remember, a trend is defined as basically lower low, downtrend, lower low, lower high. Lower low, lower high. We pretty much want both, lower low. Now if we get an equal high in a downtrend, we can still consider it a downtrend, but it's got to make another lower low, and this of course is suspect when this does this. Ideally you want it to be a lower high and lower low every time. Well, in price we've still got that all the way here. Everything on this chart is lower low, lower high. But inside of that energy, or inside of the price bars, we're seeing this energy that's diverging. Now, most people using a MACD, yeah, they're familiar with these divergence patterns, in this case on a lower low. And you get a higher low in MACD. But what most people don't watch for is the higher high. That is really key. Now, we're not going to always get that, but when you do get that, it's an early warning. As soon as we see this, we note it right away. We say, oh, wait a minute. That's an early warning indication. Now, there's nothing to do yet, but you know, everybody wants a leading indicator. This is a potential leading indicator. You see that, and right away, red flag goes off. Okay, now let's watch. Nothing to trade yet, except just watch. Where do we come in? Let's watch how low this thing goes on price and how low it goes on momentum. Sometimes, I see it all the time where momentum will put in a higher high and then goes right back down and puts in a lower low. If that's the case, well, that's a different pattern. Basically, it's a expanding triangle pattern, and it's tradable, but it's really, really one of the more challenging patterns. I usually don't trade it personally. So if we want to see a real shift in momentum, we want to see both the higher high and the higher low. Okay, let's move forward and see what we get here. And boom, there it goes. So now we don't get the reversal confirmed. Again, for the reversal to occur, we have to break this high. And basically, well, go to the highest high. This is the point when it's confirmed. There will be a lot of people coming in and buying the breakout of this high because they'll see this double bottom. And again, the double bottom is confirmed when we break this high, so that's when a lot of people enter the pattern. But by using the momentum indicator, we saw the higher high, higher low, and so we can enter way down here. Look how much earlier we got in than everybody else, about 2 points. That's pretty good. This is the Russell, so that's 20 ticks that we're in, and everyone else is just getting in. They're just getting in now. We've already got 20 ticks in the trade, and we're not getting out there. We're just getting in. Now this is crossing several days, but still, the pattern is the same. Okay, and then what happens? Well, we go into a little contraction pattern, and then out of contraction comes boom, expansion, and then we rock and roll. Okay, we go right up here to this high. This would be a normal, resistance area, of course. That'd be a good target. In fact, actually, I probably would take some off here. Not everything, but I would take some off there because you've got this and you've got this cluster of moving averages. So you would take off some there, and then this is your next exit. Okay, comes all the way back down. We start another little trend going back down, and we get the same pattern going here now. Now this one is fairly parabolic, but notice again we don't get the same type of, when I say parabolic, I mean the market goes pretty vertical. So notice how here it never comes back and touches the 15 EMA. That's a pretty good sign of the market going parabolic. In other words, just pretty vertical, as opposed to getting these nice sine wave type retracements. So when that happens, then your momentum is pretty straight down too. So we see now here we get a little retrace up on momentum. That's because of this price movement. That's our first real retrace to the 15 EMA. But we don't have a high to compare this with because momentum and went pretty much just straight down. But what we do have is we have a lower low and a higher low. And again, that was a leading indicator. Now notice too, what's Dad doing? Dad's still, going down, flattening out, but still down. And Mom is giving you the early indication that Dad is about to turn over. And, the more conservative trade would be to wait until here. Now everything's confirmed. Dad's up. Mom's been up. Moving average 15 EM. We're above the 15 EMA, and it's holding now a support. Remember, when we get inside the 15 EMA, it's almost always going to go at least to the 50, but it'll provide support on the way back up. Get a 2-bar reversal pattern there. I get pretty messy in my writing here. But there's your nice 2-bar reversal pattern that we like to see. And again, you could even see this as a bit of a head and shoulders pattern. Reverse head and shoulders, of course. Now, this is another thing I want to show you. Does it happen all the time? No. The market does not always put in a momentum reversal before a price direction change. So here we've got a nice move up, and then boom, market totally reverses, doesn't it? Totally reverses. This is basically a V-top. On V-tops, there is no momentum shift at the top. Notice higher high, higher high. So the very tip top, there's no momentum shift. We still have a higher high. Because momentum does not slow down at the top. This is an exhaustion move. And so there's no momentum shift. So is there any way to read these? Any way to anticipate these? Yes. Yes, there is. But it's not as easy. And the way it's done is through counting waves. So 1, 2, 3, 4, 5. Now the average trend is a 5-wave pattern. Okay, so the same thing is on momentum. You count that on price, but you can count it on momentum as well. So you can start looking at this and say, okay, 1, 2, 3, 4, 5. Okay, you know what? This is an average trend, and we are there. Therefore, when I see this type of a pattern, which is, again, and you can count your waves here now. The waves on here are going to be a little different. Waves on price. 1, 2, 3, 4, 5. And too bad I can't write very well with this thing. Make it a little more clear there, hopefully. Scratch that one out. Okay, so notice they don't align perfectly. Why is that? Because momentum leads price, remember? Momentum led down here at this bottom. So it's counting this as 1. But this is still the downtrend over here because momentum is leading price. So therefore the waves are not necessarily always going to line up. Sometimes they do, sometimes they don't. This is a case where they don't. So you can count these and then start saying, okay, you know what, we're getting to the place where we don't expect the momentum. Now if I'm counting waves on momentum, all I'm saying is I don't expect momentum to continue up, at least in the short term. And so therefore, trying to take trades longs up here, is out of the question. It's a low probability scenario to look for this to continue now. And so therefore you don't do it. So most of the time what this is telling you is just to stay out. It's not really telling you to enter a trade. It's telling you either one of two things. Number one, if you're already in, if you got in down here or down here, hey, this might be a great place to lock in profits. Okay. Number two is if you're not in, well, just stay out. This is not a good place. Don't look for more retracements. Just, it's too late. You're too late to the game. So wait for another time. Here's another thing you can do. And this is not in the manual. So here's an extra bonus one. Quite often, what we do is our final stop will be below a swing or a cycle low. So that would be here. And when we break this low, we would be looking to take our final exit. Well, that's a long ways down from there, isn't it? Normally it's not that far, but because it's a parabolic move and a V-top, this is the way it is quite often. But another approach you can do is you can say, well, I'll use my stop here at the, not the swing low of price, but of momentum. And that gets me out a little earlier. Oops. It will get me out about here. So that when I break the low of momentum, I know I'm going to have a lower low in momentum now, and that'll get me an earlier stop than price. So another option for a trailing stop, again, that's not in the manual, so that's an extra little freebie. In fact, I don't think I've ever shared that before with anybody. So that's a brand new one for y'all. Okay, so that's Mom and a few little tricks on Mom. And again, here's a scenario where we did not get a momentum shift first. Here's a zeroing out example. Price gets stuck in the moving averages. 50 MA is flat also. Don't forget this rule. This is very, very important. When that 50 MA goes flat, it's best to just stay out of the market. That'll save you so much money. It's not even funny. That one rule right there, that's worth thousands, tens of thousands of dollars. Notice all of this is junk. This is all just consolidation in here, messiness. And this, you just don't want to be trading this stuff at all. This is where accounts get chopped up. When accounts get chopped up, this is where you can have several winners and then lose all your money trying to trade this junk. What would keep you out? Well, 50 MA flat here, but then look, 50 MA starts coming up. But what's going on with momentum? Nothing. It's zeroed out. Zero it out. So for most people, just stay out. This is a great way. And again, one of those rules that's not going to help you make money, but it will save you so much money. It'll prevent you from giving all your money back. And that is worth a ton. Okay, so that's it for video number 2. You can proceed on now to video number 3.